Bitcoin has had a wash trading problem for years. Exchanges trading for their own accounts to create stimulated volume. You see that in the NASDAQ market all the time.
Hey guys, welcome back to the Daily Crypto. Today we have Max Keiser as he talks about where he believes the Bitcoin price is heading in the coming years, the Ukraine-Russia war effect on Bitcoin, and the unfolding global economic disaster. Max Keiser also analyzed how the current market downturn differs from past ones. Another year, another cryptocurrency crash. However, according to Max Keiser, upon closer inspection, it appears to be different this time around. Max Keiser believes that the current market scenario is vastly different from previous ones since the current price-determining force for pricing has switched from the New York Fed to the East, to Russia. Bitcoin price within 24 hours surpasses $22,000. Solana and Avalanche have also risen by 18%. The worldwide cryptocurrency market valuation has risen to $961 billion, up nearly 3% in the previous 24 hours. However, overall, cryptocurrency trading volume increased by nearly 26% to $127.41 billion. Not wasting much time, let us take a look at Max Keiser's forecast for the 2022 bear market. Don't forget to like and subscribe if you love the stuff we provide on this channel.
I often say Bitcoin is a risk-off investment. It's not a risk on, it's a risk off. This is where you put your safe haven cash. It's hard to make that case with the volatility the way it is, but when you have something, for all the other reasons, it's unconfiscatable, uncensorable, immutable, it makes sense. And it makes a lot of sense for 1 billion or 2 billion people out there that have been unbanked. That's where the growth's going to come. That's where the adoption's happening. Those are the changes, some differences, some similarities.
During Bitcoin's 2017 surge, Bitcoin hit a high of $19,783 in December 2017, before plummeting to the 4-digit range just 1 month later. Throughout the 2013-2014 cycle, Bitcoin achieved an all-time high of $1,127, a level that it effectively defended during its 2018 decline. The collapse in Bitcoin's price Saturday morning also impacted the larger cryptocurrency market, with Ether falling 12.4% to $948, considerably below its 2017-2018 cycle highs of $1,448. Other big cryptocurrencies witnessed lesser drops in the last 24 hours, with Solana's SOL falling 8.6% to $29, Cardano's ADA falling 9.1% to 44 cents, and XRP decreasing 6.1% to 30 cents. There is no question that bear markets may be unsettling, but the stock market has shown that it will eventually recover. Bear markets may be fantastic opportunities to buy equities at reduced prices if you change your mindset and focus on prospective profits rather than probable losses. According to Max Keiser, historical causes of market decline were predicted since the well-known exchange lacked liquidity and it was too unpredictable to be used for trading. However, regulatory control in exchanges, like as BitMax and others, was also a concern. He also mentioned the long-standing issue of wash trading in Bitcoin. Having said that, he allegedly indicated that when Saylor initially started buying Bitcoin, only about 50 million in daily turnover was legitimate Bitcoin, and the rest was wash trading. According to him, NASDAQ has been engaging in wash trading for years in order to control pricing. When mood shifted, there would be an 80% drop due to a lack of activity.
Bitcoin has had a wash trading problem for years. Exchanges trading for their own accounts to create stimulated volume. You see that in the NASDAQ market all the time. NASDAQ is a network of dealers, right? It's not like the New York Stock Exchange where you have a specialist at this post making a market. You have a network, and that NASDAQ is for years guilty of wash trading amongst themselves to create the painting the tape and all these other techniques to create the illusion of volume and to manufacture prices. And Bitcoin had this problem for years. And so when the sentiment changed, you would have an 80% drawdown because there's just no volume. There was no volume. Now, what's different here is that over the past, let's call it the Michael Saylor era of the past several years, the volume has become legitimate and the demand is legitimate. And so the markets are legitimate. But the issue here would be the layering on top of this market of these derivatives or DeFi and cross collateralization. So that's created an obstacle for good price discovery. So that would be the difference. But the net effect is the same.
Almost every 4 years, the amount of money that cryptocurrency miners receive to solve the algorithmic problem that allows them to record transactions on the blockchain is halved. A parabolic rally is always triggered each time this happens. Each consecutive high was higher than the last time, and when a new high was established, the price never hit a low again.
You know, people always, of course, ask me and ask you and ask others for price predictions. And it's an incredibly volatile asset. So it really is incredibly difficult to make a price direction other than to say that what I've been saying for 11 years, I'll tell you the direction of Bitcoin. It's up. You know, if you hold it for 3 or, maybe 3.5 years, anyone who's held it for 3.5 years or 4 years is in the black, right? So if you've got a time frame which is not a long time frame, 3.5, 4 years, you're going to be in the black. But I think that would be the main difference is that also, in this environment, when I was at the Bitcoin Miami 22, the conference, the difference between that conference and let's say a conference from 10 years ago is the quality of the suits, right? So the people on stage are wearing, $3,000 suits. Back 11 years ago, 10 years ago, people would show up in torn t-shirts and they were coders and, rarely came out of their basement. But it's the same kind of struggle to come to terms with this emerging asset class. And in a lot of ways, it's the same.
Bitcoin fell as much as 17% over the last week to 22,603, the lowest level in roughly 18 months, after the Celsius lending platform froze withdrawals, adding to an overall risk-off environment as traders increased wagers on more aggressive Federal Reserve tightening. Bitcoin is posed to revert to the lows of its previous halving cycle peak. According to Max Keiser, that has never happened before and is significant for the crypto investment case.
You have, of course, the amount of money that's been flooding the system has increased every year for many years now. I mean, we got to the central banks have decided within the last 6 months to raise rates and really put an end to a 40-year bull market in the bond market.
One of the key causes of the present bear market, according to him, is the worldwide factor. With the Russia-Ukraine war in February, a 40-year bull market in bonds and financialization came to an end, signaling the start of a secular inflationary rise in global markets related to commodities. On a macro level, this is the first time Bitcoin has confronted a rising interest rate environment, resulting in a dramatic shift in capital flow.
On the macro side, this is the first time Bitcoin has faced a rising interest rate environment, which causes on the macro side a huge shift in the funds. You see, for example, something like the Russian ruble is the strongest performing currency in the world in 2022 because it's commodity based. I think starting in February with the Russia-Ukraine conflict, we saw the end of a 40-year bull market in bonds and financialization and the beginning of a secular inflationary move in global markets that'll be tied to commodities. Commodities were not a big factor for 40 years. It was financialization, interest rates, extend and pretend, just create more bonds, lower, the coupon rate, extend the maturity. That's the way the world worked for 40 years. Now we're in a new world where suddenly the price of stuff like energy and food, it cannot be hidden anymore. It's actually hitting people's bottom line, and that's not going to change anytime soon. That's a secular shift in the inflation in the economy, in the globe, that's going to be with us for years, not a few months. And so that's something that is new for Bitcoin.
Do you as well consider the present market different from the past? If yes, comment below what you think will be the fate of the present crypto market and that of the coming years. Don't forget to like and subscribe. This is The Daily Crypto. We'll see you in the next video. Bye for now.